5 Money Watch.
A lot of older Americans find themselves in an awkward position of having lots of equity in their home, unable to qualify for a refinance loan, and wishing they had a way to get some of that cash out of that home. Several years ago, the concept of a reverse mortgage was introduced, but those reverse mortgages were really expensive and pretty difficult to understand. This morning, our real estate expert, John Adams, is here to share some details of a program that the FHA has created that's designed to help out. And it's really going to work for some people, isn't it, John?
I think it is. And first, we don't ever say older Americans. They're senior Americans.
Okay, sorry about that.
There we go. It's very important.
What exactly is a reverse mortgage?
It's a wonderful concept because it is for American seniors who have substantial equity in their home, not necessarily paid off, but close.
Okay.
They don't have to qualify for it. There are never any payments, but it can allow them to tap into their equity. And so they get either a lump sum of cash or a stream of payments or just a checkbook to use as a home equity line of credit.
So, for example, if there is a senior couple, their home is worth, let's say, $200,000. Right. It's paid for.
Right.
The government gives them a loan based on the value of that home?
It's based on, this gets confusing, it's based on the value of the home, the age of the youngest partner, their life expectancy.
Okay.
So the older they are, the more they could draw out because it's less likely they'll have it out for a long period of time. And it's also based on if there's any mortgage to be paid off.
Okay.
Also, the current interest rate figures into that, and as we know, this is a great time to borrow money.
So then how does the government get its money back? How does the mortgage company get its money back?
The house is responsible for it. As I say, there are no payments required as long as the owners live in the house as their principal residence.
Okay.
Now, when they move out or when they go to their reward, the house then is collateral for this debt.
Gotcha.
Now, the heirs can choose to sell the house. I think they have 6 months to pay off the debt, or they can just turn the house over to the government. Here's the wonderful news. If more is owed than the house is worth, the estate and the heirs have no financial responsibility for that.
Gosh, it sounds like a really great deal for somebody who needs the cash and is a senior.
It's a way you can use your home to stay at home. And so many seniors want to stay at home, but they need some repairs done to the house, or they have an unexpected medical expense. This is ideal for that. It is complex, and so for that reason, the government requires that seniors go through a federally approved training program to learn about the details and decide if this is right for them.
Is this for everybody?
No, it's not. A lot of times, if there's an alternative, it's less expensive. But remember, there's no qualifying. You don't have to have any income. It's all based on the value of your home, your age, and what's owed on the property, if anything. So it's worth looking into, and it's certainly, this is a much preferable solution to what was out there just 5 and 7 years ago. I think I came and talked to you about it and said, yeah, this is not something we really ought to recommend.
Right.
In contrast, I really think this is a solution that many seniors are going to look at and take advantage of, and I think it's a great program.
Very good. I know you're going to be getting lots of questions about this for sure.